computer. Hi and welcome to Mrs Mummypenny Talks, and I am delighted to say I'm on to episode 34 and I have a guest who is sat next to me. I shall introduce him. But what I want to say first of all is, so since I evolved Mrs Mummypenny Talks into my own brand where I record it at home using very fancy recording equipment, I've got a very posh microphone next to me, and distributing it out on all of my social media channels. I've been doing it pretty much by myself. But what I've decided to do, certainly for the next few weeks, is get some really interesting people in to talk to and interview, particularly about things going on in lockdown at the moment and how business is changing, how society is changing. So I've got some amazing guests lined up. We've got Andy here, and then we've got another guy called Tom. That's why I said the name Tom, and also your son is called Tom. It's all very confusing. But yeah, I'm interviewing Tom Baigrie next week, who's the CEO of Lifesearch, and then I'm interviewing a lady called George the following week, who has a small business where she sells oracle cards. So I'm really, talking to a whole variety of different people, men and women, all different races, sexes, sexual preferences, whatever. I'm just going for balance across the board. So I hope you enjoy it. So you are the first sort of official one-to-one guest. There was a bit of a Q&A last week with Pension Bee. Yes, Andy Kay, who is, introduction to you now. So you are a football buddy. So our sons both played for Cambridge United Football Academy. Now your son is just about to be under 14.
That's correct. Yep.
My son is under 13, but my son plays up a year, so often plays with your son. So we basically spend hours and hours by the side of football pitches, normally in Newmarket, watching the football, obviously, but also having conversations about life and business and everything. So Andy is an angel investor, which is a fascinating job. So I'll leave you to share a bit more about what you do, Andy.
Yeah, well, I've had an interesting career. I've always had an entrepreneurial streak to me. So when I started my first business when I was 21, and wow. It didn't last.
Have you ever been employed? Sorry.
Yeah, I have actually.
Okay.
It was following that business because I went to college/university. I'd like to say university, but it was really Chester College of Higher Education. So you didn't need the best A-levels to get in. I'll be absolutely honest with you. But I started a business straight after university, college, and it was in aerial photography. So I wasn't a pilot, I wasn't a photographer, but I hired a plane, hired a photographer, and my ex-girlfriend was a geography student. So she did the map reading, and we flew over taking these pictures of villages, actually around Cambridgeshire. And it was, my job was to hold the window open in the plane so the photographer would stick the camera out. And the business, it wasn't founded on a lot of expertise, let me be honest. So it lasted about 6 months, but I learned quite a lot of lessons from that business when I was 21. And what I learned most of all was the fact that you really needed to learn your trade before you could really run a business. I mean, some people do it, but I then went to work for 10 years for a company. Right. To learn how to manage and do things, and then I started another business. So that was how I started, really. And
that was a really good lesson at the age of 21, though.
It was, yeah. Things like training your staff, having sort of management systems in place, just understanding what you're selling, what your product is, all those things that I didn't know. I then went on to learn before I started my next business. And just to sort of continue on why I'm now an angel investor sounds quite grand, Lynn, so thank you very much.
Yeah.
But I did do, once I'd done my 10 years of working, I started a self-funded startup with my business partner, Mari, and we're still business partners. And we started that in 1999. And what we did was, we were both made redundant, or took voluntary redundancy, and we took the money that we got, which was £5,000 each, and put it into a business account. And we sat in a coffee shop in Soho and sort of worked out what we were going to do.
That's
we were either going to go.
amazing.
It was fun because we were either going to go into coffee, should have done because that was quite a growth area.
Oh yeah.
Or remain in fitness, and we remained in fitness. But that was a successful startup, and we did that for a number of years before selling it. and then were backed by venture capital. So I borrowed lots of money to build some big fitness centres in London. And it's really from that experience, the startup experience and the venture capital experience, that led me to do what I'm doing now, because I took a lot of learnings from doing it myself with no money and sort of bootstrapping it, as they say.
Yeah.
And then the same sort of experience I took from borrowing lots of money, I mean, not tens of millions, to build health clubs. And then, and sitting in a nice sort of boardroom in a city and talking to all these guys who were saying, and they were guys, badly as that is, and they're basically just saying, make more money. But they weren't really giving you any help. So the venture that came out of that in the end, which I'm now doing, is called Socius Investing. And Socius is Latin for partner. And what we do now is we invest in people. Instead of just putting our own money in, we put our own money, but also some really practical help. So I'll go along and pitch with the people I'm working with now. I'll write blogs for them. I'll write proposals for them. I'll help train their staff. We'll do everything to help the business sort of flourish. And that's sort of a balance between the startup mentality and the big sort of private equity venture capital mentality.
Wow. So it's sort of like, I know it's not, it's sort of like a social enterprise, because it's not a social enterprise because obviously you're making money from it, but you are giving a part of yourself to each of the businesses you help. And obviously you take an ownership of that business in return. But so it's sort of like, if we can describe it to the listeners and the viewers, it's like Dragon's Den, isn't it? But actually, you probably, knowing what we both know about how Dragon's Den works, because we've both got friends who have been offered money on Dragon's Den, you don't necessarily get great help from Dragon's Den.
Yeah, it is, that model is what it is. I wouldn't want to suggest them as grand as Peter or Duncan or whoever's on it now. I don't even watch it now. But
Peter's still on it. Peter's and
yeah.
Deborah Meaden.
Good. Yeah,
I like Deborah Meaden.
She's excellent, actually. Yeah. In fact, so is Peter. They're all excellent. They're all obviously there for a reason. Excuse me. And they do some brilliant work. And our model is the same as that. But we do offer that practical help, and lots of it. And that's, some people would say it's a mistake in a way, because you get so sucked into the business that you end up working quite a lot in each of them. But Mari and I, we still work together from those early days, still the owners of Socius Investing. And we work with people that we really like to work with. And I don't mean that in a sort of like, let's choose who we work with type way, but it is a bit that way.
Yeah.
We simply wouldn't invest in someone unless we really thought that person was
so
someone we wanted to work with.
Yeah. So let's touch on one of your companies who I know really well, because I've met the management team, which is ProInsight. So all of your businesses that you help, they're all in the sort of leisure industry. And what ProInsight do is they are a mystery shopping company I'm a mystery shopper for them. And to be honest with you, like over the years, because I've been doing Mrs Mummypenny now for 7 years, it's my 7-year birthday, in fact, this month. I've looked at everything, every single way of making money, and on the internet, and most of it, I'll be very honest with everyone, it's a pile of rubbish. It's you have to spend a lot of time to earn a very small amount of money, and there's very little making money stuff online that I actually recommend. However, ProInsight is somebody who I do recommend, because basically I get to go on spa days and they pay me to do it. That sounds amazing, doesn't it? And it's not just spa days, right? So one of their recent your recent clients, as you're one of the owners, was like the Houses of Parliament. So I'm going to go off and do a tour of the Houses of Parliament, and you just do a report at the end of it, reviewing sort of customer service and your experience as a customer. And because that's the sort of stuff I do on my blog anyway, it's second nature to me. So if I can get paid to go and do that kind of stuff, then I'm absolutely going to do it. David Lloyd is another one of your clients, isn't he? So I'm on the list to get my platinum membership with David Lloyd as soon as things are trading again, because the problem with that industry and COVID is that it completely stopped. So yeah, tell me about that business and sort of the challenges they've had and what they've done to overcome the challenges.
Yeah, it's been really interesting. I mean, when COVID came along, a huge impact on everyone's lives, but huge impact on business. And ProInsight, again, going back to why we invest in that company, David Hopkins is the managing director. He's a fantastic,
lovely guy.
Fantastic.
And Hannah, love Hannah.
Hannah, yeah, Chloe, the senior management team there are absolutely brilliant. They've got enormous energy and drive and passion about mystery shopping. And when I first invested in the mystery shopping business, I didn't think it was something that I'd get excited about, but the way that business runs makes me excited about it. And we've got 30,000 mystery shoppers now, so it's growing nicely. We started off in fitness because that's what we all knew. But as you say, Lynn, we now do everything from Starbucks to the British Army to Houses of Parliament to Mercedes, BMW, you name it. And it's a really smart company. And what David and the team did during lockdown, because when you're measuring the interface of a customer reaction with a business and businesses are shut, and when ProInsight's revenue dropped off a cliff, I mean, it all ended in March, basically, for that period of time. But the government's been good in terms of offering lots of schemes to support businesses and fair play in lots of respects to them. But we didn't furlough everybody at ProInsight. David, Hannah, Chloe will remain as employed in the business and working. And during that lockdown period, when businesses were closed, we maintained good contact with all of our clients. We also did some really interesting research pieces because we're very dominant in the fitness sector, and the fitness sector switched from being a physical thing to an online thing overnight. Yeah. When Boris said on the 20th of March, everyone needs to close, fitness went digital in a week. And so what ProInsight did as the measuring agent for all things consumer, they looked at 144 different fitness businesses and identified that 50 of those had pivoted to go online. And then they set about doing 50 different online group exercise classes, measuring them with a mystery shopping scenario stroke questionnaire, and then publishing the results to the fitness industry, all completely free of charge.
That's so clever.
It is super clever because when we then start to release teaser blogs saying every single time we did a group exercise session with, whether that was Everyone Active or David Lloyd or Your Zone 45, it was just a teaser went out from ProInsight social media that said, you know, Everyone Active, thanks for a great HIIT class today, or thanks for a great yoga class. And then we started to tease, we started to say that we were generating this report and it was available if you would subscribe to it online, etc. All free of charge, of course, but the interest has been phenomenal, and that will get in the wider leisure press this week. And we hope we might get, you know, because fitness has been right at the heart of Boris's plans for lockdown. You could only leave the house to be fit. And Joe Wick's got over 1 million people, I think, on week one. I know he faded out towards the end, which is human nature, but you know, it's been there and it's been front and center for most people. And it was a fantastic response by ProInsight. Illustrated the energy and passion and the sort of capabilities of the team there to just get on with it and do something positive.
So when we are eventually allowed to get back to the new normal, which is potentially the 4th of July, although who knows, because again, there's a lot of challenges there for the fitness business. You know, the government is hoping for, I'm going to do a little bit of economics now, as I did study it at university. Nice. The government is hoping for a V. Yeah. A V. So we've gone down and the government is hoping we go straight back up again. But I think in reality, and talking to several economists over this period, it's going to be more like I can't do it, a U, a cup shape. Yeah. And I think once we are allowed to go back to the new normal, that's really patronising to do that, but I think we'll bobble along on the U for quite a, how long is it? freeing piece of time.
Yeah, absolutely. Business and everybody, everyone wants everything to be normal and great. And so the V-shaped recovery was what everybody desired. So quick dip because of COVID and then straight back, as you say. So, and I think your U-shape, or some people describe it as W-shape, where it's a bit jagged, the recovery, before it gets back onto its trajectory. And historically, things have returned well following pandemics. You know, there's SARS or bird flu, but this is much bigger, much bigger.
This is
incredible.
Like the only thing we've no, you can't even compare it. This is like the plague.
Yeah.
And I mean, I know the plague. I've done some research into the plague, and I know that apparently the plague killed 1/3 of the European population. Like in the early 1600s, it was before the Great Fire of London, wasn't it? Which was one of the things which helped to rid of it. But just imagine like 1/3 of the population being killed.
I think in more recent history as well, Lynn, I think just after the war, the flu killed more people than during the war. You know, it's incredible, the numbers. Spanish flu, I think it was called, but forgive my ignorance if anyone's listening who knows more. But after the First World War, that was a bigger killer than the war, is my understanding. Any historians out there, please check me on that one.
Yeah, but then that's probably why we are comparing now to our recovery after the Second World War, because like the Second World War took like a huge amount. We're completely going off radar here. The Second World War cost the UK economy so much money, didn't it? And likewise, this, you know, all the furloughing, all the grants, it's costing the I would love to find out the actual number, you know, the total number the government are spending on this crisis, because it's tens of billions of pounds, isn't it? And I just can't comprehend how the world can afford it.
Yeah.
But then it just goes back to, we can almost like rewrite the books as a world economy, because we can make money, not we, but the government, the central banks, they just can make money. And I know it's...
this is why you did economics at university and I did sports science. Because honestly, I've read a few books on economics and it's mind-blowing how the balance is so fine, and yet it's such an important balance, but how do you make it balance? It's just impossible to understand, I think.
I really want to. I've looked into this. I want to go and do a master's in, because my degree is in mathematics with statistics and management. So, and I did a couple of economics modules, but I want to go to Cambridge and do a master's in economics, right? And obviously, you know, we live near Cambridge, so it's more than doable, and it would be an amazing university to have it from. But do you know how much a master's costs?
No idea. 16
grand.
16
for a year.
Yeah, I know. You'll have to work quick, do it in half a year.
I just can't comprehend to get a master's in economics would cost me £16,000, because it's Cambridge University. You know, if I did it at Hertfordshire University, it would be £9,000, you know, for the years of fees. But so I'm not going to do that.
Yeah, it's a shame. It would be interesting. You could come on next year and tell us what we don't know.
Yeah. Maybe there's like a brand out there who will like sponsor me to do it.
Yes, interesting.
Yeah.
But the economic impact of COVID-19 is going to be absolutely huge, obviously. And I think there's also a lot of, there's going to be lots of unemployment to follow the end of the furlough scheme, because it's been a really protective blanket around a lot of businesses. My business included. One of my businesses called Educated Body. It's a fitness design, equipment supply and management company. And although we kept 4 people on in the senior management team, we had to furlough 55 people. And to bring those people back, we're going to need revenues to pick up really quickly to be able to bring all of them back. Because what health and fitness is facing at the moment is 50% capacity or less, 50% revenue, and 100% of overheads and staff costs. And that's just not going to work. And that's the same for health and fitness. Is in a bad place because it's in stage 3 and it's a difficult thing to social distance and do. But if you're in an airline business, or if you own a nightclub, I mean, if you own a nightclub at the moment, what is the whole raison d'etre of a nightclub for everybody to get close together? You just couldn't. Music venues really struggling. So there's going to be lots and lots of fallout as a result of this.
Yeah, I was talking to a friend yesterday who they do a lot of stand-up shows in theatres around the country, and they were like, yeah, I've already heard of loads of theatres who've gone bust already. There's just it's so traumatic to think about it, but there's just so many industries that are going to be affected by this, and it's the unknown as well. Like the furlough money from the government is they've extended it, haven't they, for a couple more months?
So I believe it's extended to October, and it tapers off.
Yeah,
and I don't think businesses can complain about that tapering, where businesses are going to be required to pay 10%, 15, 20, and however that tapers off. I think businesses have got to accept that they've been given a lifeline, and now they're going to have to find a way to trade and make it work. Difficult, but you can't let the government. The government can't bail everybody out forever and ever and ever and ever. It just can't happen.
Or can they?
Well, they could, but I don't think they will. I think they have to wean everybody off of furlough. Because the thing about COVID-19, it's not treated everybody evenly. There's been some terrible, obviously, human tragedy associated with some real business tragedy. Not tragedy, but there's been some real business implications as a result of it. But some people have really suffered in lockdown, and some people have, quite frankly, enjoyed it. You know, it's not the same for everybody. And there's lots of people that have reconnected with their families. They've enjoyed walks, home cooking. It's been fun, and you're almost reticent to say that because it shouldn't be fun, because we're in a pandemic and people are dying and businesses are failing. But it's not been even, and some people have, and I do think that a lot of members of staff that are on furlough will be sat there and thinking, well, this is okay because I'm on 80% of my salary, or 100 if the company's topping up. And I'm not spending because people can't spend at the moment. And so it's okay for some people, and yet it's terrible for other people. So I'm not trivializing it in any way, but it is not an even treatment. I'll reference the video that that it's been out in the public arena for about a month now, that I did with Pension Bee. So it was very, and I really want people in all of those pots that you've talked about there to go view it, because I spoke to my brilliant friend and collaborator Faith Archer, who she's an ex sort of Telegraph personal finance writer, and she's now got a blog like I have. Her blog is much more with less, and obviously mine's Mrs Mummypenny. And we just did a half-hour session like what we're doing, but we went through every single line in your household expenses, you know, from mortgage, rent, all the way down through, you know, energy, TV, broadband, mobile phone, food, all the way down to, you know, random one-off stuff like newspaper subscriptions, contact lenses, gym subscriptions. And we talked through every single line of how to save money now and what the implications of stopping those costs now are going to be in the future. So, you know, for example, I'm on a mortgage holiday at the moment because I just needed the breathing space. I will be honest and say my business has actually been all right over COVID. In fact, it's done a little bit better because, as my readers will know, I've done lots of content for brands. But I still am very aware that I have to build up an emergency fund, which is more, and we've had this discussion before, I think, about emergency funds, where I always had 3 months sort of set aside in cash. But now what I'm working towards is having 6 months set aside in cash, because this whole crisis has just highlighted to everyone that you have to have money set aside in savings, in cash, literally, that you can get hold of like that. So I've stopped things like, I don't know whether you have different financial situations, but I've stopped putting money into my pension for the moment because it's too long term. I'm 43, like I can't draw on that money for 12 years. For the moment, I will probably reconsider when I get to my year end, because it helps with, you know, company stuff and tax. I've stopped putting money into my investments as well, just because
I just want to get to this comfortable point of view. I would never even consider, and this is different for everybody, but I would never overpay on my mortgage, because I've got such a great low mortgage rate of like 1.3% or something. Why would I overpay on my mortgage? I've got a huge outstanding mortgage balance, but it can just sort of sit there. So that's my sort of financial strategy at the moment. And I'm not in this, cash conserving stage, but I'm trying to sort of send out these messages to everybody that there are ways to literally take your outgoings to pretty much zero, but you will have to pay for it one day, which is what everybody's maybe not thinking about too much at the moment, because they're in the middle of it.
Yeah, I think it sounds really sensible, Lynn, because I think especially that 6 months buffer. And if I go back to my business experience of when COVID hit, the first thing any business should have thought, and I hope that all of them did, and we certainly did, was how can we protect jobs? Because you have 55 people in that particular company, say educated body that I mentioned, who are all working for you. And when Boris made that announcement on Friday at 5 p.m, the 20th of March, WhatsApp, text, Messenger, everything's going mad. I need to show up, what am I going to do, blah, blah, blah. And you're trying to reassure all your staff that it will be okay, but you just don't know it's going to be okay. But once you've tried to make sure, and that's where the furlough scheme was brilliant, that you can save everybody's job for the moment, the next thing was collecting in cash. So looking at the debtors, trying to get as much cash as possible, which is exactly your point from a personal level, is that this has taken everybody by surprise. And if you didn't have a cash buffer, you quickly can get in trouble. So I think it's really wise for everybody who's listening to try to just be sensible. And everyone wants to be mortgage free, but maybe money's so cheap right now that it's not exactly the time to risk your 6 month buffer on it. Save it somewhere. If you find that you're okay down the line, then pay a chunk of your mortgage.
I don't think I'd ever. It's something that I think about all the time, this balance between, I know how much to have in my cash, that's fine, but I'm never sure of how much I should have in my investments, how much in my pensions, how much I should overpay my mortgage. And I think it changes depending on where you are in your life as well. Like, you're a little bit older than me. Yeah.
Definitely, yeah.
So you will have a different attitude to money than I do. Your children are a little bit older than mine as well. So you are closer to things like further ed. You're closer to your kids going to uni, aren't you? So you'd be thinking about that in the next.
Absolutely.
Your daughter's older than your son, isn't she?
Yeah, Lucy's 15, Tom's 13. And they're both bright kids. So I would imagine they'll go to a university like you did, rather than a college of higher education like I did. Yeah.
Maybe University of Cambridge.
Yeah, no, it's near. Yeah. Maybe Tom can play for Cambridge United and go to Cambridge University. That would be a good decision.
Oh, let's talk about football stuff while you said that, because you know what confuses me is so just to reiterate, so your son Tom is under 14, my son Dylan is under 13, and they're going to get to this point soon where they reach this apprentice stage, and it's very uncertain as to what happens with, and also just to point out, both of our sons are pretty clever. Not bigging them up, but they are. So I would hope for Dylan certainly to go on and do A levels, and I'd want him to go to university as well. Like, I don't really understand how that fits in with football. Yeah,
it's on my things to do list, Lynn. Because I know someone who's works at Manchester City, and I want to speak to their education officer at Man City, because Cambridge United are fantastic in every respect. I'm sure you'd agree. The way that they treated the boys, really good guidance, moral fibre, all is brilliant, really good. Again, not a bad word to say about Cambridge United, but they have limited resource. And you talk about businesses in trouble. Football clubs in Division 2 are in trouble. Football clubs at Man City's level, not so much in trouble.
Yeah.
So they've got their business concerns as well. And if you are taking a bunch of kids from an academy and putting them into a scholarship and trying to educate them, and for absolute clarity, that means in the first instance, they go for a day out of school every Thursday, I believe. So you miss 1 day a week of school. But quickly after that, if they're good enough, they'll take them out of school full time, but they have to educate them. And that education is one size fits all. So every player does the same course, every player gets the same qualification. And if you're super bright, like your son is, that's not going to be enough. And it's a huge gamble as to whether you wanted to be a footballer and you're going to make it in a football world at the expense of your education. And that's the real difficulty for me and for Tom's journey, because he's a smart kid and he can do a lot of smart things. And he's a good footballer, but really, as a parent, you've got to keep your feet on the ground. You know, it's about enjoying it now. And the fact that their teammates, our sons, the fact that they love going to football training, they love playing the games, and they get some incredible experiences. You know, I play football now, and I was always okay at football. I played for the county and things like that. But really, I'm still playing the dog and duck. Whereas our kids are playing Liverpool and Bayern Munich and Man City and incredible football teams. And it's incredible fun. But I think you've got to just keep, there's a lot of parents who are living, I think the words vicariously through their kids. And, you know, I see it on social media, all of this stuff around, you know, I can't wait for so-and-so to start his journey and blah, blah, blah. And it's okay, but you've got to keep your feet on the ground, because the chances of them being footballers is difficult, because most kids in the country at some point want to be a footballer or an astronaut or a movie star. And those jobs are not easy to get, because everyone wants to be it.
A lot of them
or
want
a
to
blogger.
be
Exactly. Exactly. Yeah. So it's very difficult. And it's a difficult one, because they're talented boys and they could be footballers. And how much do you put behind that? If I watched the film on Ronaldo the other day, it's brilliant if anyone wants to watch a documentary about, if you think that you don't like Ronaldo, watch this documentary, because he just
I don't like Ronaldo. I think he's really cocky.
Well, I'll challenge you to watch this and say the same. Watch it, because he's a nice guy and he just works really hard, and he's a family man, and he's just not the big head that you might perceive he is. But there you go. But it's difficult to, I don't know where I'm going with this, Lynn, but it's difficult to be a footballer. But he put everything into it and he became one. If you put half into football, half into education, you might fall short on both. And that's the problem, is you have to take the gamble really early on, or your kid has to take the gamble really early on, at 15 or 16. That's why I'm going to speak to the Man City guy.
Which is very soon for both of our boys. So it's something I think about a lot. I'm probably like you. I'm developing my LinkedIn network, where I'm connected to a lot of scouts, football managers, football agents, people in all different clubs. Not like I would no way get involved in any of that type of stuff. But you know, it's not in the too distant future where we might be having those kind of conversations. So I just want to make sure, you know, like we're connected to the right football agents, because I don't know if you have read anything from The Secret Footballer, but he uncovers the sort of dirty world of football, and it's fascinating.
Definitely, yeah. I mean, it's a murky world.
It is.
It really is, yeah.
So that's, but it's a huge part of our lives. And the great thing about both of us being self-employed is that we have the freedom to work when we want, because the commitments of academy football are huge. Like it's sort of five days a week is the normal, because Dylan certainly does extra training. So that's 3 nights during the week, and then an extra training session or a game on Saturday, and then definitely a game on Sunday. And we're in off season at the moment. I mean, COVID obviously stopped the football, which has been really difficult mental health wise for all footballers, you know, children and adults alike. But so once we get back to pre-season, which we have no idea when that's going to start, but I'm guessing August.
I think so.
Then we'll be back to the same structure of that 5, and it's a huge commitment because neither of us live near Newmarket, so it's an hour, 55 minutes, 60-minute commute for me. Then you sit at training for an hour and a half. Then it's and then on a Thursday it's the worst, isn't it? Because training doesn't start till 7 o'clock. 7 o'clock, which is great for, you know, they get to finish school, come home and have some dinner, but then we leave at 6 to get to Newmarket for 7. The boys train till 8:30, and we don't get home till 9:30 on a Thursday. They're knackered then, because it's, you know, the 4th day of their week. And you know, Tom, like Dylan, they have sports commitments at school as well. Like Dylan plays, he's in the basketball team, and he dropped rugby, thank goodness, because when I went to watch one rugby game, I feared for his life.
He's quite committed in a tackle, I'll give him that.
yeah, but yeah, no, it's just really interesting, the football world, and I've written loads about it. So you can search on my website. If you search like football in the search box, it comes up with all these articles I've written on Dylan's progress, because it is really interesting. And I get lots of parents who message me who are at the beginning of the journey in particular, because they want to know the reality of it. Like it costs 2 or 3 grand a year in petrol, tour costs, because our boys end up going to Germany sort of 2 times a year as well, to play the likes of Bayern Munich and everybody that you've mentioned. So yeah, it's a big commitment, but it's the things we do for our children.
Yeah, no, it's my daughter Lucy plays netball at high level as well. So she plays for under 15s Mavericks, which is sort of like a netball Super League team. So she trains in Norfolk. So on a Monday night, I have to get her to Thetford as well. So sometimes that's why I'm not there on a Monday, because my wife's a netball coach. She coaches somewhere else. Tom needs to be at football. Lucy needs to be in Thetford, which for my house is in the middle of winter. It's not a great trip. And when you get to Thetford, there is, I hope nobody listening lives in Thetford, but there's not a lot to do on a Monday night in winter in Thetford. There's not much going on.
Oh, the forest is. There's a big forest.
Yeah, it's just past Centre Park, so about another 20 miles on past Centre Park.
I know. Yeah, because I drove to Wells next to the sea 2 weekends ago, and I drove through Thetford Forest.
Yeah. It's all right in the daytime. Rainy November night, not quite so attractive.
Yeah. Oh, right. So I need to keep an eye on time. I reckon we've been talking for maybe like 35 minutes. So we should try to sort of sum it up. So did you want to just touch lightly on your fitness franchise business?
Yeah, one of my businesses alongside Mari, my long-term business partner, is called Your Zone 45, and that's a fitness franchise business.
Yeah.
Some of you might have heard of F45, and that's a hugely successful business. Sold out all of its territories in Australia, 600 studios in America, quite a few in the UK now and elsewhere. Mark Wahlberg recently invested, conservatively valued at over $500 million. So really good.
Shabby.
Ours is the same as that, but a bit smaller. Yeah. So we've got 7 studios at the moment. It's HIIT training, 45 minutes group exercise. A really popular sector in fitness now is the group exercise sector. Yeah. And obviously COVID stopped us trading, so all of our franchisees are currently dormant and surviving, but dormant. And then coming out of this, I do think that because of the fitness industry will downsize in terms of some of the big clubs will jettison some of their non-profit making clubs and use COVID as an excuse to restructure and do clever things business-wise. Whether they're moral or not is another question. I think there'll be lots of fitness people who will need to work. So it might be an opportunity for fitness people to enter into business and look at franchising. And it's not... Yeah. It's not without cost, Lynn, but it is an affordable way to get into owning your own business with a support network around you.
I know a lot about franchise because I used to be the commercial franchise manager at EE. I used to manage the money side of the franchise network, where we had about 100 franchise shops. I don't know if people know, like, you know, the EE retail network, there's about 500 shops on the high street and 100 of them are franchised. Quite a lot around our sort of area, Hertfordshire, Cambridgeshire, like Letchworth, Hitchin, they're all franchise shops. And I know the franchise manager, Jonathan, really well because he's helped me out a lot with my business since I quit EE. But to buy certain franchises like EE, for example, is quite a big financial commitment. Depending on the size of the shop, it's a different value for each retail location, which I'm sure is the same for you.
Yeah.
But it was around, I'm going to say like 150k to buy an EE franchise. And what I know about McDonald's, because that's a highly franchised business as well, to buy a McDonald's franchise, you're talking way more, like £1 million plus. Because Jonathan, the guy I know, he used to be a McDonald's franchisee before he stepped into EE. Now he stepped into a Pilates studio business. So
interesting.
You'd be a good person for you to link up to. But so your fitness franchise business, is that more affordable than EE?
It is, yeah. It's I'll give you the exact price, Lynn. It's 17,995 for the franchise.
Oh, really?
Yeah,
17.
17. So it's low cost, but so that compares to say F45's 55, I believe at the moment.
Yeah, F45 is a lot.
But that reflects the stages that the business is at. F45 is a great organisation. It's doing really well. There's lots of demand for franchises from F45. Where we would say to our franchisees or prospective franchisees, it's more of a ground floor opportunity. You're getting in at the bottom, so that is reflected in the price. And also, you do get a chance to shape it more if you're in at the bottom, because I know all of my franchisees, because there's only 7 of them. F45 won't know their 2,000 because you just can't really. So you become more of a number in that. Whereas, I've got a meeting on Friday with a prospective franchisee who's considering either us or F45. And there's pluses and minuses for whichever way he chooses to go. But he's a bright guy. He's got lots of fitness experience, lots of business experience. He would do well choosing us because he could actually add to us and grow with us. Whereas with F45, he may find himself just on the sidelines. Who knows? But yeah, it's the 17,995, but then you've still got to find a studio. You've still got to fit it out. So there's more money involved in fitting a studio out, of course. And it's the same with an EE shop. You'll be buying the franchise, but you've still got to rent your shop, do the conversion, put the signs in the window, all that sort of stuff.
And with EE, the franchisees, I shouldn't give too much away because it's probably in my NDA when I left. But should I? Yeah, I'll just say it. They had to buy their stock from EE. So they were at the mercy of the EE handset buyers, mobile phone buyers, which are really, really, really talented buying team. But you're still knowing the franchisees that I knew, and they're incredible entrepreneurs who are so clever. Like, I learned a lot of my negotiating skills from a gap negotiation course, but also from the franchisees, because I was negotiating this complex price book with them with 10 different franchisees. It was just the biggest nightmare of a job. And it's one of the reasons why I left EE, because it was so stressful. I was, working 12-hour days in London, and I had 3 young kids, and I wasn't seeing my children because I was doing this incredibly stressful job. Okay, it came with a, pretty good salary, but the stress just wasn't worth it. So, but yeah, franchising is a really interesting business model. That the pros of it are amazing, because for that investment, you're part of this brand, so you get brand handholding and you get brand assets, and like the central function of your business will do like some of the overall marketing campaigns. So
yeah, absolutely,
great model.
And you do get, it's myself and Mari, my long-term business partner. Jeremy Taylor's one of the other investors. He's one of the founders of LA Fitness. So there's quite a lot of experience in the business that, you can draw upon when you need to ask questions about how much should I charge for membership, or should I do it on a monthly rolling? Should I do a digital solution? Should I use this marketing campaign or this one? Because we've sort of done a lot of that in our careers. It's just, there's a lot of experience.
Yeah. So if there is anybody listening from the fitness world, then how can they, because we need to wrap up, how do they get in touch with you? On LinkedIn, is that the best way?
LinkedIn's brilliant. So if I don't know whether you can supply my LinkedIn. I don't know how that I would connect this conversation, but
no, so there'll be notes
yeah.
on the YouTube. So I'll just put a link to your LinkedIn page,
Yeah,
and then people
absolutely
can
brilliant.
connect to you.
Yeah, absolutely brilliant then. Yeah.
Yeah.
And
Is
just
there,
find me on LinkedIn, Andy K. You'll be able to find me.
yeah.
Socius Investing is
Yeah.
the sort of, and it will mention your zone in my LinkedIn profile, your zone 45. And yeah, we'll have a chat, because it's that's where it all starts. I think, if you're thinking about it, have the conversation, because no question's stupid. So even if it's just a glimmer of a thought in the back of your mind, could I be a fitness franchise owner? I'd be really happy to talk to you, or a mystery shopper, or anything, quite frankly, that I'm involved in. Have a conversation. It always helps.
Yeah, just link up, because that's the I honestly think one of the core reasons why certainly my business has been successful, and probably yours as well, is because of my network. I'm really well connected, and that's because of me. Like, I build that connection. Yeah, I've worked for lots of big companies like, HSBC and Tesco's and EE, but I nurture those relationships, and then people reach out and look after me, but vice versa, I reach out and look after them. So it's just this really nice sort of serendipity. I can't say the word serendipity, but the longer version.
Yeah.
I can't say it.
Serendipitous? I don't know. I might be just making that up.
No, that is a word. That is a word, because I wrote it in a blog post last week, but I spell checked it. Yeah, it's just that kind of, I think that's how the world needs to work. Be a bit more giving to each other.
I completely agree, Lynn, and I think, don't let mystery get in the way of things. And I won't go on for too long, because I know we're going to wrap up. But when we borrowed the money from the venture capitalists, we employed corporate finance advisors to help us get that money. I should have just Googled them, picked up the phone and asked them. I was saving myself a fortune. And that's a bit of advice I would give to anybody who's looking to raise money. Just, those companies, those businesses exist to give you money to further your business. So just connect with them direct. Don't go through a third party who's going to charge you £50,000 for the privilege. Go direct.
Is that how much it costs?
A bit more, actually. Yeah.
Wow. Maybe I should become one of them. No.
Could be lucrative. Yeah.
Oh, cool. It was lovely to speak to you. That was a really, really, I know it went off on tangents, but it was a really good conversation that I think a lot of people will gain a lot of knowledge from. So yeah, I'll put all your I'll put your LinkedIn details in the show notes. That's what you're meant to call them. Yeah, thanks for talking, and it's great to actually see a face rather than just a voice.
Thanks, Lynn. I really enjoyed it. Time flies.
Yeah, cool. Great conversation. Right, I'm going to stop recording. How do I do that?